But for now, let's go over some basic characteristics of management investment companies. Generally, a management investment company collects money from multiple investors, creating one larger account with which it invests in various securities within or across a variety of industries. Shares are then sold to the public, each representing a portion of the overall holdings in the portfolio. Each investor is part owner of the pooled portfolio, but they do not choose the specific securities in which it invests. Rather, the management company's officers or board of directors hire an investment advisor to manage the portfolio. The composition of a management investment company's portfolio will vary based on certain qualities. Management investment companies can be classified as either closed-end or open-end. Closed-end investment companies offer a fixed number of shares for public purchase. Shares are first made available through underwriters in a single offering, after which they are bought and sold on the secondary market at prices influenced by market conditions. Closed-end companies can invest in various securities, including common stock, preferred stock, and debt securities like bonds. In contrast, open-end companies, or mutual funds, can offer an unlimited amount of shares, distributing them continuously. This enables the company to generate a potentially indefinite amount of capital. However, unlike closed-end companies, mutual funds allow investors to redeem their shares or sell them back to the company, rather than trade them on the secondary market, which ultimately reduces the fund's capital. There are various types of mutual funds in which you can invest, and we will discuss them in more detail in later videos. One of the obvious benefits of investing in management investment companies, both closed and open-end, is diversification. Because investors own shares of a fund or portfolio instead of individual securities, their risk is spread out across many smaller investments, rather than just in the stocks or bonds of a single issuer. However, in order for a management investment company to be considered diversified, its portfolio must meet certain criteria, specifically the 75-5-10 test. As per the test, 75% of the management investment company's assets must be invested in outside companies, those with which it is not affiliated. Of this portion, the amount of assets invested in a single issuer's securities cannot exceed 5%, and the fund cannot own over 10% of any issuing company's outstanding securities. The remaining 25% of the total assets are not required to be allocated in any particular way. If a fund does not meet these qualifications, it is considered a non-diversified investment company. Another advantage afforded by management investment companies is professional management. But keep in mind, you will often pay for this service with sales charges and fees, which will ultimately reduce your return. As with all investments, be sure to determine and acknowledge the risks you may encounter when investing in closed-end and open-end funds, such as capital risk, market risk, and interest rate risk, just to name a few.
Let me straight to the point. I am from investor from XYZ company. I would like to invest in your company, but first I would like to see your background of your company and also financial analysis.
So basically, our company is Panasonic Holding Berhad, or formerly known as CAT Radio and Electrical.co. And we had been founded in 1965 by our founder, Datuk Sri Chu Weng Kak. And we first starting as a small retailer of electrical home appliances, and in 1974 we have our first branch, and 2 years later we have ventured our branch into an import, export and also distribution of electrical home appliances, and we had registered our trademark in 1984. And but before that, we had import our first batch of audio and visual appliances in 1982. And starting from 1998 until now, we had been known as Panasonic company, and we have been sold electrical home appliances under the same brand. Okay, so this is our financial analysis. You can take a look at it.
Can I know Pensoni is based on Sharia compliance or not?
Oh, we are not going according to Sharia compliance. We're just conventional company.
Okay, thank you for your information. I will call you back if I interested to invest in it.
Sure.
Okay, that I've been straight to the point. I would like to invest in your company, but at first I would like to see your background of your company and also financial analysis. Can you tell me?
Now I will tell you about our company background. So basically our company is Panasonic Manufacturing Malaysia Berhad, which is manufactures and sells electrical home appliance and related component under Panasonic brand name. So our product include electric, ceiling and ventilating fans and home appliance. So before our company was named as Matsushita Electric Company Malaysia Berhad, and it was changed to Panasonic Malaysia Berhad in 2005. And for your information, our company was founded in 1965, and now the headquarters is located in Shah Alam. Okay, this is our financial analysis. You can take a look.
Audio Jungle. Audio Jungle. Audio Jungle. Audio Jungle. Jungle.
Can I know is Asset Sony is based on Sharia compliance?
Okay, for your information, our company is not Sharia compliant.
Okay, thank you for your information. I will call you back if I interested to invest in it.